What is going on, investors? Hopefully, you guys are having a great day out there. Time to talk about Salesforce.com, ticker symbol CRM. The company just came out with their Q2 earnings, and they beat on EPS, they beat on revenue, and they boosted their full year guidance as well. That is like hitting for the cycle if you are a public company. We'll talk about the Q2 numbers. We'll also talk about the Q3 guidance here in a second. We'll get into these numbers as well. Part of the reasons why the numbers are looking good and the guidance got boosted is Salesforce.com closed on their Slack acquisition, which I think was like a $25 billion valuation or something like that. And so it was a massive, massive acquisition by Salesforce. Is there evidence of it here in the balance sheet, the cash flows, those types of things? I'll show you, and you guessed it, there certainly is. Then we'll talk about this one from a technical perspective. Now, we got to do the obligatory pat the investor guy channel on the back here, because our last video back in May was easy trade idea for CRM stock. We said it was going to go from 235 up to 250. That's right. Not only the title, but the thumbnail. I don't do this very often. And so, look, there might be channels out there on YouTube that can predict these things more often than I can. But when I shout these trades out, it is because every possible thing is lining up for a company to do it. And my 2-year-old son, I ended up putting this trade on inside his account. And I tell you what, he's loving his daddy right now, because daddy put this trade on at 235. It went up to about 250, came back and did a back test to 235. No big deal. You often see that happen in uptrends. You come back, retest the original breakout level, and then boom, we're off to the races. This thing is way up here. This thing's up at $265 per share. Talk about what this means from a technical perspective. Could we go higher? Could we retest all the way up here to 283? And I'll tell you, have I sold the shares that I bought for my son in this, what I called several months ago, an easy trade idea? Talk about that from the technical perspective here in a second. Look, over the last year, stock's up 24%, but it's ripping higher today. And in the after hours, got a $253 billion, $253 billion market cap on this one. And I tell you what, when you look at earnings and those types of things, it's certainly stretched, but this company does have the momentum behind it. Now, let's talk really quickly about Q3 guidance. The Q3 guidance revenue is going to come in, we'll just call this right at $6.78 billion to $6.79 billion. I think we're just going to call this $6.8 billion and probably plus or minus another million or two. The consensus was for $6.66 billion, so somewhat unlucky number. I'm glad they raised guidance over at CRM. They just finished a quarter where they did $6.34 billion, so the next quarter is going to come in closer to $6.8 billion. That's solid growth, and I think some of that has to do with the Slack acquisition that closed in the last quarter for Salesforce. Now, let's take a look at the numbers here. We got the last 3 months ended here. We got 2020 here, 2021. So we've got a year-over-year view on a quarterly basis. The two right-hand column is a year-over-year view on the 6-month basis. So we're 6 months into the quarter for them, or the year, excuse me. And so we get a view of it there. So we've got our total revenues here coming in from $5.1 billion up to this 6.34. Again, we talked about how Q3, they're going to come in closer to 6.8. That is absolutely solid growth. Now, the cost of revenues, I think one thing, actually, Salesforce.com, in my opinion, checks 2 boxes, okay? It checks the revenue growth, okay? This is really solid revenue growth, and you're growing at a very, very nice clip at this company. In fact, about 25% year over year to this $6.3 billion. So you're growing at over 20%. Look, companies like Facebook, even a company like Google and Microsoft, and some of these companies might actually be growing as much and are far more wildly profitable. And so that's why when I look at a company like Salesforce, I'm actually looking more at it from a trading perspective, just because that these financials, they're good, but they're not great like some of the FANG stocks that we cover regularly here on the channel. Now, that doesn't mean this is not a good investment, okay? Because the other box that Salesforce checks is super, super high margins. Take a look at this cost of revenue. Look at this. Subscription and support revenue went from $4.8 billion up to this $5. $5.9 billion. Take a look at how barely our cost of revenue went up. It went from $1 billion up to $1.15 billion. So barely up, like a rounding error almost upwards, and we had significant revenue growth on there on the top line. Same thing for professional services. That looks like to me kind of a loss leader as well. And so as those revenues grow, they're going to grow with these top line revenues. These are going to cancel those out. It basically is a loss leader. Total cost of revenues coming in at $1.6 billion. I tell you what, you got $6.34 billion worth of total revenues. You minus out your $1.6 billion in costs, your gross profit is super high here. Okay. And so in some cases, this reminds me of a Microsoft. This reminds me of a Facebook. This reminds me of Google. Okay. Because this gross profit is super high. Off $6.3 billion, you got $4.7 billion worth of gross profit. Now, what doesn't remind me of those companies is all these other costs just are still really, really high. We got research and development coming in at $1 billion, marketing and sales coming in at 2.7. Look, Salesforce.com has a lot of recurring business, okay? They're acquiring customers, they're billing you on a monthly or a yearly basis. And so some of the sales you have to pay for up front, and it pays for itself over the life of that contract. It could be years, could be decades for some of these clients that they bring in. So at some point, this could hit a tipping point for profitability, but we see here too, general administrative coming in as well. We've got our total operating expenses coming in at $4.4 billion. Last year on a quarterly basis, we were sitting at $3.662 billion. So you take this gross profit here of 4.7 and you minus out 4.395, and you guessed it, income from operations is just, and I say just, $332 million. That's not a lot. And look, for the 6 months, the same thing is holding true, okay? This company has really strong revenue growth on a 6-month basis, growing, that looks like to me about 20% from 10 billion up to 12. Your gross profit is still mega high, okay? A lot of those revenues flow down through the gross profit because you went from 7.5 up to $9.1 billion on the revenue side. But take a look. Our operating expenses went from 7.4 up to 8.4. That means income from operations on the 6-month basis at 6.86 billion. Let's double that number. Okay. You get to, we'll just give them credit for we'll give them credit for some more growth, right? For the next 6 months. And we'll just make this $1.5 billion. Okay. $1.5 billion income from operations. I said at the top of the show that this company has a $253 billion valuation, and they're clearing, if we annualize out their 6 months income from operations, clearing barely $1.5 billion to the income from operations side. Now, this company does do a nice job. They invest in startups, okay? They invest in smaller tech companies. And I tell you what, that seems in a lot of ways probably a better business than CRM's actual business. And so at some point, maybe you look at CRM in that way, that the leadership and management that is making decisions on these strategic investments. Take a look. In the quarter, they made $526 million on strategic investments. Over last year, they made 682. Over the last 6 months, they've made 814. And that's impressive because income from operations was at 686. This company has consistently made more money investing in other companies than it has running their own business. So you have to be comfortable with that to a certain degree with Salesforce.com, that the business has not reached a tipping point of profitability like we've seen with a Microsoft, like we've seen with Facebook and Google and Alphabet, and those are the same companies, but Apple as well. So from the net income side, things look a little bit better. They do have to pay some taxes and things like that, but take a look. For the net income side for the last 6 months, we actually cleared $1 billion on that net income side. So if you want to annualize that number out, you're at $2 billion. But you're still at just a massive valuation, like 200 times net income on a market cap perspective. It's just a company, in my opinion, that that's where the fundamentals just run a little dry for me with Salesforce.com. You got great revenue growth. You've got great gross margins, but unfortunately, your operating expenses wipe out almost all of that gross profit. But when you factor in their strategic investments, this is a company that actually does pretty well, but it is still wildly overvalued from a traditional valuation metric. Now, in terms of cash on the balance sheet, you guessed it, they closed a mega acquisition of Slack, and you guessed it, cash kind of flowed out of the balance sheet. We got about, we'll call that 9.5 billion at the beginning here. We had 11.8. Accounts receivables also been drained a little bit too. That went from 7.8 billion at the beginning of the year down to about 4 billion. There might be some seasonality in that as well. As you get into halfway through the year, they maybe collect on some bills on some clients, those types of things. Maybe throughout the rest of the year, that number starts to trend back up. I'm not exactly sure. I'm just showing you that total current assets from this company actually got drained out quite a bit since the beginning of the year. We went from 21.8 billion, 21.9 billion down to 16.2 billion dollars. Now, what got bolstered up is goodwill. When you make an acquisition, you bolster on a lot of that cost or a lot of those assets onto this goodwill side. So from a total asset perspective, we went from 66 up to 88. That looks great, right? But again, a lot of that actually comes at the detriment of cash and accounts receivable, which are two things investors should take note of. Now, we also blew up the balance sheet a little bit. We got our non-current debt here went from 2.7 billion all the way up to 10.5 billion. So that means our total liabilities went from 24 up to 33 billion dollars. So not quite, I wouldn't say this balance sheet was glorious and crystal clean before, but we've probably gone from like a B- down to maybe about a C+ on this one, in my opinion, to give it a grade. Now, in terms of cash flows, I noticed for the last 3 months, we pulled down this net income number of 533. The net cash provided by the operating activities was very, very similar. I know it's like, it's like about $100 million and some change, but it's basically the same. And so, you got about $386 million running the business. For last year, we were at 429. Same thing holds true a little bit for the last 6 months. You were at 2.2 billion. You ticked it up to $3.6 billion. Some of that has to do with that accounts receivable being drained since the beginning of the year. And so from a cash flow perspective, things are painting the same story that we saw from the operating side, right? This company doesn't make a lot of operating profit, okay? And it's just because a lot of things get chewed up with this company in terms of cost-wise. They're also in growth mode. When you acquire a company like Slack and you spend the type of money that they did, look, it's just going to chew up a lot of cash, and you're just not going to look as good from a cash flow and a balance sheet perspective as you did before the acquisition. Now, here's evidence of that business combination. We got $14 billion in the most recent quarter. That's massive, okay? That means $11 billion. Yeah, $11 billion flowed out of the company from an investing activities. Now, how did they finance a little bit of that? Okay, they issuance that debt. So we saw that debt on the balance sheet went from 2.6 up to this 10.5. So here it is down here in cash flows. We issued that $7.9 billion worth of debt. That offsets a little bit of the $11 billion that we had to spend combining those businesses and those types of things. All things being considered, the net decrease in cash and cash equivalents was $2.2 billion over the last 6 months, over the last 3 months. But take a look at the last 6 months. It's basically flat from a cash flow perspective. Okay. And so this company is right about where it was on a 6 months over 6 months basis in terms of cash that it had on the balance sheet. So they're doing a nice job over at Salesforce. You've got to have, in my opinion, if you like Salesforce.com for the longer term, you've really got to buy into the vision that these revenues are going to keep going up. This company is still going to make really good investments in startups and smaller companies and profit when they decide to sell those companies or those companies go public. And eventually, the income from operations is going to catch up, okay? Maybe, you could probably look at the early days of a Microsoft, and you could look at the early days of maybe even like a Facebook or something like that. Their income from operations probably wasn't super impressive, okay? Those are things that can potentially grow over time. Those are things that you need to believe in if you want to believe in CRM for the longer term. Now, from the shorter term, I love stocks like this, okay? We talked about on the last show that we did back in May, which is right around here. This stock was in a downward channel, but it had broken out. This is why on the FANG stock recap shows and all the videos that we do on stocks, we're looking for the breakout, okay? A lot of investors, especially newer investors, really get hung up on, I'm trying to buy the low. I'm trying to buy at the exact bottom and watch this thing rally up. I tell you what, you could beat your head on the wall for a decade or more, your whole career trying to do that. I actually think it's way easier, much easier as an investor to actually play the breakouts, because take a look at this. Again, this one was at 235. We made the call on our video that this was like the easiest trade you might have all year. It went from 235 up to 250, came back, retested 235. No panic at all. I did not sell my shares. I did not have a stop loss in. I knew that this 235 level was likely to hold. If it didn't, hey, look, it didn't work out, but it looked like it wanted to hold, and yes, it did. And now we're all the way up here to about $263 per share. The stock is stopping right about here. I see a little bit of level of resistance up here at 266. I think the stock has been a little bit as high as that in the after hours. So you're asking yourself, is this the end? If you had this trade on like I did, it's time to put a trailing stop on. That's what I will do. I'll put a trailing stop on this one because I think the next possible stop with this one is stalling out here at this 270 mark. This is a logical area where this stock could stall out is. That's where it stalled out here. That's where it stalled out here as well. Wouldn't surprise me. This is a monster move. From the lows, you went from 210 up to 270, and we're talking over just a couple of months, like 3 or 4 months. That is a monster move for the stock. On top of that, from a fundamental perspective, traditional valuation perspective, from an income from operation and a profit perspective, company's not that attractive, okay? And so it wouldn't surprise me if we stall out here at 270. I'll put a trailing stop on. We stop out here at 270. We start to retrace. That stop would get hit, and my son would make some good money in his account. Now, the other thing that happens is we blow right through that 270, and we retest these highs back up here at 280. This is why I like trailing stops, because look, I could be wrong. This thing might just blow right through 270 over the coming days and weeks ahead, and we could come all the way up here to 280, and then look, all bets are off. You come up here to 280, and you blow through 280, and this thing could start looking like the Microsoft chart or like a Facebook chart. I mean, look at a Facebook chart. Once it breaks up, boom, gone, okay? Same type of thing could potentially happen with CRM. We could break above the highs, and this thing could be off to the races. So I would play the momentum on this one. The momentum is still in an upward direction. Just for me personally, and you can disagree with me in the comments, from a fundamental perspective, this is not your classic buy and hold. This is not a stock. I'd much rather put more money into a Microsoft, much rather put more money into a Google, an Amazon, or those types of things. If you're already mega overweight all of those stocks, which I think is actually pretty hard to do, well, sure, maybe you can add a little bit to your portfolio, but I would size it accordingly, okay? I'd make sure I was mega overweight all the major FANG stocks, because they are growing just as fast as CRM, and they are wildly more profitable. They're doing buybacks. They have way more cash, like way more cash on their balance sheet. Some of them pay a dividend. Just from a shareholder perspective, those stocks make a lot of sense. But from a momentum perspective, this stock looked like it wants to continue to run in the coming days and weeks ahead, at least in the after hours. It is going up. And boy, if you took my advice a couple months ago, you're up pretty decent on this one. Maybe buy yourself a cup of coffee or go out to a steakhouse tonight and have a dinner on me. Hopefully you guys have a great day out there. Enjoy the rest of your time. We'll be back again soon here on the Investor Channel. Good luck with your investments.